So let's now move on to the next part before we analyze the drawdown in further detail. I'll just go through a little bit in terms of the different risk managements that we can do to capitalize this percentage return in terms of how much money you would have actually made in terms of pound return. The first type of risk management is what we have done over here in our live trading room is 1% trade risk. Okay, so we just do that as a very simple thing, which is 1% of the account risk, which is what most institutional and professional traders actually use. So at 1% risk, that becomes cumulatively for Q1 performance 20.63%.
If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone.
Now, for example, if you were to relate that to pounds, so for example, if 1% is £100, that means more or less your account size is about £10,000. Then this 20.63% would relate to £2,063. Okay, if the 1% is £100. Now, if the 1%, of course, relatively is £200, then that would be double of that. That would be about nearly about £4,000, 4,136 to be exact. And then if it's 3%, then it's 3 times that. That will be about £6,000. You get the drift. So that's the first type of risk management. Okay, if it's £300 at 1% risk, then so far you would have made about £6,000 over 3 months, which is about £2,000 per month, all passively on 15 minutes of trading. Okay, all passively on 15 minutes of trading. Okay, that's the end of day trading that we do. Swing trading, you get the trade set up, you put it on risk management and let it run. So that's that in terms of that type of risk management. Another thing also I do want to mention in this terms of percentage risk management is that sometimes you might not want to risk just conservatively 1%. You might want to risk maybe 3%. Okay, because some of you might say, Tiro, we don't have that much big of an account, because if 1% is £300, then you need about £30,000 in that. So some of you are thinking, okay, I don't have that much capital to spare. What you can also then do is, which will go into the next part of this video, which is analyze the drawdown of any of the strategies that you're trading here, or any of the strategies that you're trading yourself, and analyze how much drawdown does it go through, and from there then you can then allocate your percentage risk management. Do you want to risk maybe 3% of your account, because you know eventually with your strategy statistics that the maximum drawdown it can only go to is 5%. Okay, so even if you have to risk 3%, you're still fine.
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
Another way to look at it is also to look at your expectancy as well from your strategy stats, which is something that we got over here as well. All this tells you is that the expectancy of that strategy per percentage of risk is 0.5%, and the average loss is 0.58. All this means is, in simple terms, if you were to risk 1%, your actual loss is only 0.58%. So therefore, if you want to take an actual loss of 1%, you can actually risk 2%. Okay, this is all it tells you roughly. All right, so that's another way to look at it as well, so that eventually, actually, you only will lose 1% on an average loss. That's another way to look at it. So many ways to look at it. Do analyze this further and deeper on Traders Basecamp package as well. So that's the first type of risk management at 1% risk management. Another way is by looking at the position size. You keep a standard position size. So for example, every time you get into a position, you just buy one lot. So one lot in currencies will be 100,000 units. And in other words, when you buy 100,000 units of that currency, usually for dollar pairs, like cable, GBP, USD, Euro, dollar, that would be usually around $10 per pip. Okay, so that's another way of looking at this as well. If I were to do this type of risk management, which is a standard position size across all different instruments, then the results will look something like this. Let me share that with you. So as you can see over here, in terms of a standard position size, which I just explained, the currencies, if you just take a look at the currencies, the total over here, if you look at 2022 over here, that would be 150 pips. Net profit, and at one lot, which is $10 a pip, as I explained just now, that will be £1,500 so far for this 3 months. Okay, now in terms of the other instruments, the position size will matter a little bit because you're talking in terms of different units. So for Brent oil, it will come down to about $1 per point. So then we are looking at 1,390, silver 7,500, coffee still a loss, 490 over here, Bitcoin 9,780, Dow Jones 2,795. Total, if you total all that up, that would be about 22,475 pounds for 2022 so far. For the 3 months that we have traded, that is about 7,000 pounds on an average every month. Do remember always, traders, that it's not about the profit. You have to analyze the drawdown in detail, which is what we'll be moving into the next part. But so far, what I've shown you is the 2 different types of risk management. So one is the percentage risk management, and then the other is the position size risk management. I would usually say, I would recommend usually the percentage risk management, usually to begin off with until you're more comfortable with the drawdowns, and then you can do different things with your type of risk management. But whatever it is, your focus should always be on your maximum drawdown, which is what we're going to analyze further in this video.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.